Hi, welcome to the Market Alert for Friday the 19th of June 2015. And yesterday's session shows the market moving higher in the pre-market session from 10.45. You can see prices moving up 100 points before the afternoon session starts, and you see buying from the start there, moving higher. Bit of potential weakness here at 18,050. Again, that 18,000 level, very important. You see the market coming back and then driving through the next resistance level all the way up to 18,100, and then we get a potential buy signal through this psychological level. We'll just mark that one up, and there you see prices moving higher all the way up to the 18,150 level, which on this to the target price of the psychological level is around 31 points. As I've said for the last few weeks, I will continue to say it, if you've made money in the first part of the session, leave it, go away. And again, you can see the reasoning behind this. We have a failed signal here in the quiet part of the session, and the evening session you are lucky if you actually saw a 20-point range through this part here, just to this high, 23 points. And again, you can see the resistance there, but the market coming through and then going back. So again, just to point out and to reinforce, if you've made money in the first part of the trading session, leave it and go and do something else, because there's no point. This sideways range is probably going to last until the end of the month minimum, until the Greek deal is sorted. I can't see them leaving at this time. I can see there's some sort of deal that's going to be put forward. In the daily chart, you can see the market moving high yesterday. The interesting thing is the volume is actually lower than in the previous bar, Wednesday's bar, where we saw some selling coming into the market. So this is not moved up on any new professional buying. It's just been marked up on the Fed's pronouncements from Wednesday's FOMC announcement. We are heading back towards the all-time high. It will be interesting to see how the market progresses. I'm just going to draw in a 76% retracement here as well, just to see where the market is at the moment. We're at the 62% range, should struggle at the 76, but that is dependent upon the news, of course. So let's just have a quick look at what's to be released today. 440 is the only thing to be concerned about. Williams is speaking, but it's medium impact, and after Wednesday's comments from Yellen, I wouldn't think whatever he's got to say is going to make the market move that much more. It's very interesting to see, because in the last 20 odd years of trading, there's never been so many Fed members actually being wheeled out to actually keep this market afloat and talk about it. We only used to get the Fed chairman, who would make the FOMC announcements once a month. But now it seems they're always wheeling somebody out, even onto the business news networks, just to keep this market pumped up with all of the rhetoric of possibly increasing interest rates, unemployment down, usual nonsense that we've all grown used to. And then finally, in the implied volatility, 1280 for Wednesday. Thursday's session was at 1157, moving back down. So again, that's because the market moved higher during yesterday's session. Could do with this dropping down quite sharply before we see a correction near the all-time highs. I'm hoping the market will go back to that level, because it will offer a great short. I can't see how the market can go much higher, especially if, and it's a big if, the Fed decide to increase interest rates in September. That will send the market lower, not move it higher in theory. But this is a market now that likes what the Fed does, so you could actually see the market go on to all-time new highs, even if they do increase interest rates, would go against the normal pattern, because if interest rates increase in the banks, people tend to take the money out of the markets knowing they can get a similar return in the building society or the bank without the risk. But this is a strange market. It has been now for the last 5 years, so let's wait and see. I still stick by the fact that I can't see them increasing interest rates, and even Lagarde from the IMF has said she would prefer it if they didn't. So I wonder why she would say such a thing. Obviously, she knows that the impact on the global economy is going to have a negative one if they do. It's a case of the Fed's got to be seen to be doing something to make the markets look normal, as if everything is returning back to normal following the banking crisis and the printing of $3 trillion, which of course is absolutely impossible. But there you go, that's the PR machine at work. Right, that's it for me for today. I will see you in Monday's edition of the Market Alert. Have a great weekend, and as ever, thanks for your support and also for watching. See you in the next one.